Hey, Dan Passarelli here. Happy Tuesday. Man, was it happy if you were long the market. Holy moly. S&P 500 closed up 2% today, as measured by the SPY ETF spiders. They tried to reverse those gains during the day, but as they say, you just can't keep a good stock down, or ETF in this case, I guess. So what was driving this? Well, it's the whole whatever Trump says moves the market. He's going to delay the 50% EU tariffs until July now. Little change of pace from what was talked about just the end of last week. So, hey, now the market's up. I don't know. But you can't fight the tape. So the market is up 2%. What else do we have coming out this week? Well, barring any other tweets that are another change of mind or change of pace, we have some things that are certain to come out, and that is the Fed minutes tomorrow. And the rest of the week we have GDP and PCE, which is the Fed's favorite inflation gauge. And all that stuff is really important as we continue to kind of focus in on interest rates. Speaking of interest rates, the bond market was better. Bonds were up a bit today, which means that rates were down a bit today. And that is very, very exciting and very important, because stable bond prices and therefore stable interest rates are sort of essential to America's financial health and therefore security and everything that goes along with it, to the well-being of America. So as for today, that was good. So we've got some trading still to do. Now the VIX has fallen to below 19, which is still a historically high level. But when we get days like today, being long, straddles is starting to get a little bit more attractive. I don't think I'm quite there just yet, because I don't foresee another 2% day tomorrow, but could happen. I'm keeping an eye on VIX and implied volatility across the board, looking for some vol buying opportunities as that drops. Hope that helps. This is Dan Passarelli, Trade Smart.